Would you trust an AI with your life savings? Millions already do, and they might be onto something. Every few decades, the way we invest gets a major upgrade. Right now, we're in the middle of one of the biggest shifts yet. Automation and AI are changing everything, and leading the charge? Betterment. Betterment was built to make investing easy, affordable, and accessible. With smart algorithms and a clean design, it now manages billions for everyday people and even businesses looking for smarter retirement plans. But this isn't just about low fees and fancy tech. Betterment is part of a bigger movement, Robo-Advisors that aim to democratize investing, boost returns, and cut out human error. In this series, we'll explore how investing has evolved, break down Betterment's tech, weigh the pros and cons, and ask the big question: is Betterment the future of investing or just the beginning? Stick around as we map the seismic shifts in personal finance, one algorithm at a time. Let's rewind for a second. Imagine investing before the internet. Guys in suits yelling into phones on a trading floor. Back then, building wealth meant high fees, confusing jargon, and access mostly reserved for the wealthy. Then came the digital revolution. Online brokers like eStar Trade and Vanguard opened the doors in the late 20th century, making investing cheaper and more accessible. But even then, you were still on your own to figure out strategy and manage risk. Everything changed after the 2008 financial crisis. Trust in traditional firms collapsed, and out of that chaos came a new idea: Robo-Advisors. Betterment, founded in 2008 by John Stein, emerged as a pioneer, using algorithms to build smart, diversified portfolios for everyday people. And the AI idea took off. By 2024, Robo-Advisors in the US managed over $1.1 trillion, up more than 400% since 2018. Globally, the robo-advisory market is projected to grow from $8.39 billion in 2024 to over $69.3 billion by 2032, reflecting a compound annual growth rate of around 30%. Robo-advisors didn't just digitize investing, they democratized it. Today, anyone with a smartphone can access tools once reserved for the ultra-wealthy. Welcome to the new era. Transparent, efficient, and open to all. So, what does this new era of investing actually look like in real life? Let's walk through it, starting from the moment you open the Betterment app. Right away, you're guided through a quick, smart onboarding process. You answer a few simple questions, like what you're saving for, how long you plan to invest, and how much risk you're okay with. Based on your answers, Betterment's algorithms build a personalized portfolio just for you. Whether you're saving for retirement or a dream vacation, your investments are tailored to your goals. The app itself is sleek and easy to use. Whether you're a total beginner or a seasoned investor, you'll find helpful tools, clear visuals, and educational content right at your fingertips. And it's not just hype. In 2025, Betterment manages around $56 billion for nearly 1 million users and holds a 4.8-star app rating. That's a strong vote of confidence from real people. If you're curious to try Betterment for yourself, check out the link in the description. Please note, Betterment is only available to US residents, so this offer is not available internationally. So let's look at how the platform works its magic. Betterment uses smart tech, like machine learning and advanced simulations, like Black Litterman and Monte Carlo, to build and manage your portfolio. It's based on modern portfolio theory, which basically means it tries to get you the best returns for the least amount of risk. By processing news and social media, it constantly adapts to market changes and your personal goals. Think of it like a GPS for your money, automatically rebalancing, reinvesting, and keeping you on track. Want more control? The flexible portfolio lets you tweak your asset mix, including things like REITs and commodities. And if you're into themes, you can invest in portfolios focused on tech, artificial intelligence, virtual reality, semiconductors, or even target income strategies from BlackRock. If you are socially conscious, Betterment's SRI options let you invest for climate action, social empowerment, or broad impact. In 2025, Betterment even added crypto exposure through Bitcoin and Ethereum ETFs, giving you a taste of digital assets without the hassle. And it's not just about investing. Betterment helps with taxes too, automatically harvesting losses to boost your after-tax returns. Plus, you get high-yield cash accounts, goal-based savings buckets, and tools for charitable giving. It's a full financial toolkit powered by AI designed to make smart investing simple. All right, let's talk dollars and cents. Literally, Betterment keeps pricing simple. The basic digital plan charges just 0.25% per year with no minimum balance. That's perfect if you're just starting out. Want more hands-on help? The premium plan gives you unlimited access to human advisors, but you'll need at least $100,000 invested and pay a bit more for that personal touch. There are also small ETF fees, and if your balance is tiny and you're not making regular deposits, you might see a small monthly charge. But it's not just about cost. Betterment is flexible too. You can invest through taxable accounts, IRAs like Roth or SEP, roll over a 401k, or even open joint and trust accounts. And when it comes to safety, you're covered. Betterment is regulated by the SEC and FINRA, with SIPC protection up to $500,000 and FDIC insurance on cash up to $2 million. Let's talk results, because performance matters. 2024 was a standout year for Betterment's core portfolio, delivering a 17.6% return. That's thanks to strong markets and smart allocation shifts. But after a year like that, the big question is, can it keep the momentum going? For 2025, Betterment is adjusting its strategy, putting more weight on U.S. stocks and short-term bonds while easing off emerging markets. It's a move to stay steady in a world full of economic curveballs. Critics also point out that relying too much on algorithms can feel impersonal. If you want full control or detailed budgeting tools, Betterment might feel a bit too one-size-fits-all. Still, with a long-term average return of 9% after fees, Betterment proves that automated investing can be both simple and effective. So who actually wins with Betterment? If you're new to investing, super busy, or just want a set-it-and-forget-it approach, Betterment is built for you. Its clean interface, low fees, and smart automation make it a favorite for young professionals, tech-savvy millennials, and anyone who doesn't want to stress over market moves. In fact, users who use Betterment's tools set 36% more financial goals on average. That means they're not just investing, they're staying on track, even when the market gets bumpy. It's also great for people who care about costs or want to invest in line with their values, like socially responsible or ESG investing. And if you've got a larger portfolio, Betterment's automated tax strategies can help you keep more of what you earn. But it's not for everyone. If you're a hands-on investor who wants to pick every stock or build a custom portfolio from scratch, or who wants to pursue advanced tax strategies, Betterment might feel a bit too plug and play. If you want a dedicated human advisor on call 24/7, you might need to look elsewhere or pay more. And there's no direct indexing, which some advanced investors might miss. What's next for AI in investing? Picture this. Your investment plan is as personalized as your Spotify playlist. That's where AI is headed, offering smarter, more tailored strategies that connect every part of your financial life, from saving for retirement to managing taxes. And the growth is real. AI in asset management is expected to grow nearly 27% a year through 2032. Why? Because it can scan massive amounts of data in seconds, spot trends humans might miss, and adjust your portfolio automatically, like cruise control for your money. But it's not all smooth sailing. As AI takes on more responsibility, we have to ask, can we trust it? Will it stay fair and transparent? Regulators are watching closely, and so should we. The future looks bright, but it's not just about smarter tech. It's about using that tech wisely, with human judgment still in the loop. Robo-Advisors like Betterment use AI to make investing simple, smart, and accessible. You don't need to be a finance expert, just set your goals and the platform handles the rest, from balancing your portfolio to optimizing taxes. Think of it like having a self-driving car for your money. You set the destination, like retirement or buying a home, and Betterment handles the route. But let's be real, AI isn't perfect. It's great for the basics, but it can miss the personal touches a human advisor might catch, like how your business income affects your taxes or how to plan for a child with special needs. That's why the best approach blends both smart tech and human insight. Together, they make investing easier, more affordable, and open to everyone. Betterment is just one glimpse into what's possible when finance meets innovation. So ask yourself, how will you invest in the future?